Hello, everybody. Kirk Spano, Investing 2020s, and all the various places I am on the internet. Today, we're going to take a look at the newspaper, and we're going to talk about some things that I think should just jump out at you. I have discussed since CES 2020 the future of this decade and the next decade pretty much every week. And if you follow along with the story, it is that there are several gigantic secular trends at play that are changing the world, and you have to be aware of all of them. And your investment portfolio should pretty much tie into almost exclusively those giant secular trends. There's not a lot of point putting capital into other things, especially single stocks, if you don't think that those single stocks have some sort of asymmetric upside to its relevant index. Now, let's talk about one gigantic index, Treasury sell-off. Now, we had started buying TLT, the long-term Treasury, when TLT was at about $99 up through $101. That is a pretty strong support level, and it appears to be getting taken out by the idea that inflation is going to last longer and that U.S. borrowing rates are going to go up because of downgrades and things like that. Now, we have talked about TLT a number of times, and I just want to give the background before I throw the chart up. The people who are anti-dollar, that are anti-US, that are bearish in general on the United States, all jump onto the idea that we have out-of-control debt, that we have a debt problem, that we have a debt crisis. I've been saying since 2012, a very long time, that's not true, that the U.S. debt problem is pretty fixable whenever we decide that it's time to do it. What happened with the last debt ceiling agreement? The Democrats and the Republicans agreed that it's time to stop letting the budget increase, not to spend less money, just to not spend more money for a while. I've told you that was going to happen. I've told you for years that that was going to eventually happen. Years. That has been a core theme that I have pounded on, and I have used to justify my thesis that the United States will in fact run budget surpluses in the 2030s and maybe forever after that. The United States, and I just repeat myself because I never know when there's a new person on the call or somebody who can't believe it because of some stupid idiot that they saw in the news or at the bar or at the kitchen table or down the street, over a hedge, in a box with a fox, throwing rocks. The United States economy is so ridiculously strong that we are going to be a global economic powerhouse for the rest of all of your lives, the rest of all of your children's lives, and probably the rest of all of our grandchildren's lives. Who knows what happens in the 2100? Between now and 2100, India will start to catch up. They're going to do something similar to China, to what China's done in the last 50 years. And someday they'll be old too. China's not the big powerhouse out there anymore that we should be looking at. It's India, about the same number of people, more educated, higher level of freedom. If that changes, it would be a problem. But between the United States and emerging markets, in particular India, because they're huge, that's where essentially all the growth in the world is going to come from over the next 2, 3, 4 generations. Europe is a museum. Japan is turning into a gigantic Switzerland. But that doesn't mean that they'll have growth. Their per capita wealth will just go up. So as people die, they'll have the same amount of money divided by fewer people. That's why Buffett invested in their banks and their financial institutions and brokerages. Japan, because of the fall of Hong Kong, which China completely mishandled, is going to continue to pick up all sorts of commerce business. Singapore might be getting capped out, and there's probably a fear that something bad could happen there because they don't have a super high level of freedom. Get caught forgetting to pay for a pack of gum there. I dare you. So the Treasury sell-off, which Bill Ackman jumped on, is just a trade. There is no long-term problem for the United States. I have laid out the case over and over and over again that we have the labor force, we have the economic systems in every way that you can have them, political system, technology in particular, resources, infrastructure, strong military. I mean, you can't make a list of things that are good for a country's economy and not have the United States be top 3 in every single category. And that's despite us pissing on our education system since Ronald Reagan was president. If we ever get serious about education again, oh my gosh, if we just taught the kids math and history and literature and science, technology, economics a little bit, some psychology thrown in. If we just went back to the sorts of things that I had to learn when I went to a Catholic school, minus the religion, imagine how much time we save if we stopped teaching religion outside of the home and educated everybody. That's the only weak spot for America. So for some reason, we stopped believing that good education for everybody was a right, that it was good for the country. That's the only thing that can blow us up, because then people get disaffected, they start getting extreme, which we've seen, and things can break. That's our risk. It's nothing from the outside. Can there be a big global financial collapse for a couple of years at some point? Sure, and it'll probably happen. People like to put names on stuff like that. Oh, the Great Reset, this thing, that thing. The World Economic Forum is going to create a global government. All sorts of stupid shit you hear out there. I mean, it's really kind of mind-boggling, the extreme, off-the-chart, whack job stuff that people will believe and glom onto because it's out there so often, beaten into people's heads. It's brainwashing. It's propaganda on steroids because of the internet. We're learning all sorts of things about our own brains because of AI and because of COVID. It's not so much that people don't want to go back to the office, as they don't know how to do it anymore. And they have a reflexive action against it. You've heard me talk about, I've been flirting about going back to the office. Probably just going to buy a giant house, and have a wing for business. But we've abused our brains for 2 generations now. Internet didn't help. COVID didn't help. An assault on the education system in half the states in America hasn't helped. And yet, the United States economy is still the strongest in the world among all the big countries. Again, there's always a few little itty bitty countries that do super well. So this Treasury sell-off on the idea that interest rates are going to be higher at the long end for a long time, I think is traders talking their book. It's Bill Ackman talking his book. And he'll make money on this trade. He's already up. And people are piling on. I've told you where TLT can go, haven't I? TLT can head down into the lower 80s because that is where you have this fear zone develop. It's broken through it now. If it keeps following through, it'll probably get down here. And people will get breathy. The stock market will correct. The dollar will get strong for a hot minute, like extra strong. Not just normal strongest in the world strong, but like, hey, we're going to sit on your head strong. And that'll be the moment that all that cash you've had sitting around, right? Because a lot of you have between 10 and 30% cash. You're going to want to jam it all in, even if you just jam it all into QQQ. Because as we've seen, they're never going to regulate those companies. They're just going to tell them which hoops to jump through on the back channel. Things like Google selling off their domain name service to Squarespace. Why would Google do that? So that they can say they don't own those. Hey, we don't own the internet. We just sold our Google domains over to Squarespace. I bet somebody in government said, maybe you should just spin that out, cut a deal. Then it doesn't look like you're so big and strong because you're not buying the internet. They are, but it doesn't look that way for a hot second. So if we're not really going to regulate the big monopoly power companies, which are mainly tech companies at this point, QQQ is a great thing to buy anytime there's a big correction. The Treasuries going up in interest rate and down on this ETF is going to be one of those opportunities, it looks like. Remember I told you that I thought September, right around Labor Day, would be the bottom in the stock market this year? And I hope you remember, because I've said it like 30 times, like every other week since January. If this is happening with TLT and U.S. Treasuries, long-term Treasuries, stock market's going to get beat up. It's just the way that it works. A sudden jump in volatility spells trouble for U.S. stocks. What did I suggest that you do about 2 weeks ago? I said sell puts on VIX. Now, I didn't do it. I'm just holding on to my cash. Remember, I manage other people's money. You don't. You manage yours. Certain trades regulators don't want me to make, so I don't make them. Regulators can be really mean if you ignore them. And yet, Warren Buffett is buying treasuries, regardless of the downgrade by Fitch and what Bill Ackman is doing in this trade. I categorically guarantee you that Ackman is going to exit his trade as he gets down into this area. Inflection coming. As TLT gets into the 80s, and it looks like that's where it's going, Ackman will take his profits, then he'll act like he didn't say this was for a long time, because he said it was going to be for a long time. It's not going to be. This trade is for a few months, and you should be buying stocks when the stocks come down. That's what's going on. So when I talk about traders being traders and traders talking their book, and it happens over and over and over again. I know in the first 6 months of people being with me, they get a little irritated with me saying traders being traders. But how many times in hindsight do you look at a chart or look at a situation and go, they said one thing while they're making their trade, and they said another thing after the trade was done. Traders talk their book over and over and over again. Investors are a little different. Investors don't hype things quite so much. It's a lot harder to be somebody that holds your investments for years because it's kind of boring. It's not so exciting as saying, the dollar's going to collapse. Bad things, bad things, bad things. This is what I'm going to do about it. And remember, they've already taken their position before you hear a word from them. And now they're just trying to push you in a direction by messing with your brain, the way that we've been messing with brains for a long time. And it's just gotten more powerful because of the internet. Do you think they care if they talk you into making a bad trade? No, they don't care. And they're going to set up the next bullshit by saying something different after the trade is closed. I didn't exactly mean it that way. Well, yeah, but you should have looked at this too. Did the carrot poke you right in the eye? I'm sorry about that. But I'm not obligated to tell you things in real time or when I change my mind. Stop getting bullshitted. Now, interestingly, I think Ackman's a decent guy. But he hasn't seen $1 billion he didn't want to make. So he can make $1 billion on this trade. Then he can go back to doing whatever it is he does. So when TLT gets into the 80s and these folks who have a lot of money push the market to where they want to push it to, there you go. Then you'll hit your inflection point and things will start going the other way. What'll be interesting is what the Federal Reserve does if everything's getting beat up into the September Fed meeting. Then suddenly, which since the last meeting, we've all started to think that for sure they're raising rates again. Maybe they don't. Then maybe inflation does tick higher for a hot minute. Ackman will take his victory lap. See, I told you. And you'll forget in 2 or 3 years when the discussion switches to deflation, which I've been telling you is going to happen since 2020, is that deflation would come back in a big way in about what years? Come on, Teresa, no answering. Okay, Vince, I'll accept that. Yep, 2026, 2027, we will be talking about deflation again. We're going to start to see deflation in healthcare because of AI. We're going to start to see deflation in energy because of a diversification of the global energy system to include a lot more alternative energy. It'll just be a whiff in 2026 and 2027. By the 2030s, you're going to see oil in the 40s probably per barrel, maybe the 30s. Go take a look at a long-term historical chart or ask me to do it. Oh, that's gold. Where's oil? Am I not seeing oil? Oh, there we go. There it is. Look, I've been kind of following this one for a while. Why is oil going to stay way up here? Okay, so I've played with my chart, so it's a little easier to read here. So where are we? So oil is going to get down to the 30s or 40s per barrel. And why do I say that? How can I say that? Well, take a look at what the price was up until the early 2000s. And now it's been all over the place from below zero. People were paying to have the oil taken away because they made stupid bets. And you've had a couple spikes. And everybody remembers this spike. Everybody who's old enough remembers the 1970s and early 80s. And we just had this spike on the Russia invades Ukraine mess. Now, OPEC, primarily Saudi Arabia, with some help from Russia, has cut millions of barrels a day from production. Harold Hamm was on Bloomberg this morning talking his super pro-oil talking his book. Remember, I've met this guy. I don't think he's a good man. I've told the whole story before. I'm not going to tell it today. But as far as oil goes, listen to Scott Sheffield. Do not listen to Harold Hamm. Okay? Keep that in mind. Scott Sheffield over at Pioneer. And watch what the oil majors are doing. They're all investing in biofuels and carbon capture. While Harold Hamm is out there just trying to sell more oil and gas. Who's going to win? Who's going to be right? If in 2026 and 2027, here's one of your major trends, over half of the cars sold are EVs, and by 2030, it's almost all, right? If they're not making ICE vehicles, then you can't sell them. In 2035, it's actually illegal in a lot of places in the world, including California. Well, there will be waivers for, collectors' cars and hot rods and, whatever. And they'll just build in a giant tax or fee for buying a nice vehicle. You want a $100,000 sports car? Make it 120. 20K is going to go towards a climate fund, whatever, something like that. As this continues to shift, this is the big trend to look at, from this peak to this valley. And I would say you can even draw a line. So you take the peak, connect it to that one, and notice it's a pretty downward trend, isn't it? Broke through, now wants to come back. I'm telling you, you're going to see price of oil in this range again. Hugely deflationary. Okay, so what about healthcare? Hear me now, believe me later on that one if you want. But AI is going to cause a drop in healthcare prices by around 1/3. And it should be more, but sticky fingers and stealing and stuff. Weirdly, I would expect hospital system stocks to get crushed at some point, and you will want to buy them when they get crushed on the fear that AI is going to slash their margin. So when that fear happens and those stocks get crushed, buy them, because you still have the boomers getting older. You're still going to get immigration in this country to take care of the boomers who are getting older. We'll go from a surplus of medical to a deficit, but the AI might actually lower the price of healthcare by 60 or 70%, and they'll only pass on about half of that to the consumer and the government. It's the big skim, folks. Healthcare, led by United Healthcare, is the big skim in this country at the moment. It used to be oil. It's not anymore. Now it's healthcare. And that big skim is going to go away like every other big skim. And then there'll be a new big skim. And the dollar, after this little dive in the Treasury and spike in the dollar, turn back down for a little while, and then go back up for a little while. It'll continue to be range bound like we've talked about. We're going to get to the bottom of the range here soon, and then we'll go back up. Actually, we're going to go up and then down and then back up. Just the wiggles in the line. When the dollar gets strong, stocks get cheap, buy stocks. Take a deep breath, let some of the momentum go away, and then start looking for value. And you should primarily look to monopolists, right? Look to the companies that have monopoly pricing power, and then look to the high growth companies. So only two places you have to look. If real estate gets crushed even more, absolutely, you want to buy real estate. I do encourage you to buy more directly than a REIT in most cases. Industrial REITs and some specialty REITs are the exception. If you want to win on residential, go find 6 friends, all throw in a couple $100,000, buy an apartment complex. Seriously. Or the private partnerships that I talk about for a 20% haircut, which is about a third of what the haircut is at REITs, you can own specific projects that are a lot more vetted than something a REIT has held for 8 or 10 or 12 or 20 years. That's why I get into private real estate. Some of those old real estate projects are junk. They're old. I live in an old condo complex. I'm telling you, new stuff is better and the rents are higher because you can sell them for more money when interest rates go down. So those are your big trends. It is aging demographics, technology, decarbonization, pushing around big market. So the conference call we're going to listen to in a couple of minutes is a Metis. And the reason that we're listening to it and why I showed you how much I have invested in it is because they are in on some of the big trends. Maybe the biggest one is decarbonization. While some of you might not believe that we're causing climate change and that it's starting to get exponentially worse, I'll forgive you for being wrong about that. But I will support this investment with one simple thing. If you like refining stocks in general, imagine one that had twice the margin than existing refining stocks, because that's what's going to happen with a Metis. And they might have more than double the margin of the average refining stock because they're starting from a low number, almost zero. And that margin is coming from massive tax incentives for carbon neutral and carbon negative fuels and carbon capture. There's a reason why Occidental and Berkshire and Exxon and Chevron and BP and on are figuring out ways to get into carbon capture. The government is going to pay trillions of dollars to help save the world. I think it was Occidental just cut the deal in the Middle East to do carbon capture. Total has done it. Even China's looking around at it, because when you get commies and capitalists and business people, and big skimmers, all to get on one side of the fence, you know what they do? They tell their governments to pay them to do it. And that's what's going on. Governments all over the world are paying for decarbonization. So even if climate change isn't real, and this is just another giant big skim, the evidence suggests otherwise. The evidence suggests is that we're flirting with calamity. The money is still going in that direction. Why would you swim not just up a stream, but up a waterfall? A Metis has the ability And it looks to me like they're executing to collect so much of this tax money, not only from the federal government, but also California, which is, what do we keep coming up with? 8th biggest country in the world, whatever. And a low float stock. You put all that together, and I'm just telling you, it's the best setup I've seen in a very long time. I asked what people think the price of a Metis will be in a month, and at the end of the year, and in a year. My answers freak people out. I think there's a good chance that a Metis, if it gets added to the Russell 2000 next year, could shoot up to being a $3 billion stock within a year. $3 billion market cap. I always think of things in market cap. How big is this company in the face of the market that they're dealing with, and how the revenues will ramp? I think it's more likely that they're around $1 billion in the next year. That it takes a couple of years to get to $3 billion. But we'll see. We see spikes all the time. And if this little company catches the eye of a few more investment letters, and a few more trading rooms, and a few more hedge funds, the spike could be obnoxious because they're in the right place at the right time, and it seems like the right guy is running it. And the government's going to start showering them with money. It's already started. So when you hear all this bad news out there, just go back to the big secular trends. Say, okay, what's really going on? We know people are getting older. We know that technology is getting even better and better to the point where it creates itself. We know that decarbonization, whether you want to believe that we're causing climate change or not, is probably what has to be done to save the world. Whether it's sunspots or volcanoes or aliens or whatever is messing with the climate, we have to get to very close to carbon neutral by the middle of this century, or our great-grandchildren are screwed. All right. I'm going to get into the Metis conference call now, and I encourage you all to do the same. I will leave it playing on Zoom just so that maybe their servers don't get overwhelmed. All right. I will have an article about a Metis next week. And then after that, I'm going to be digging into the space industry with a whole special report in September. But I am going to be listening very carefully to Spire Global's earnings call, because I think you might see that stock shoot well over $1 pretty quick if he says one particular thing. We'll see if he says it. All right. Catch you soon.